What's up guys, welcome to this video. As I told you in the last one, I wanted to record a follow-up on it and show you the visualized data and some stocks that I found. So first up, I want to tell you that this is no financial advice and only for educational purposes only. And so let's jump right into the graphs. So the most important one we need to look at is probably the silver balance and the copper balance. I could show you a lot of graphs now, but I think these are the best summaries where it all comes together. And so we keep our attention there to keep it short. So over the next decade, I'm expecting for the silver deficit to grow significantly. And as you can see here, I can also zoom into this. We may be seeing a reduction of the deficit over the next 2 years, but over the long term, we are maybe even seeing a doubling of these. So we need to keep this in mind. Let's continue with the copper balance now. And as you can see here, the deficit is most likely coming in 2035 when the demand is surpassing the supply. Of course, simple concept. And so this is my expectation just out of my models, right? So, but how am I now picking stocks? That is a good question. And for this, I asked AI to pick out some of the major ETFs of each of the demand drivers and of the general industry we are looking at, so silver and copper. And to determine where the capital and the money currently lays in and which stocks perform best, I also compared these ETFs and these funds to see where the capital flows currently are within this thesis, right? So let's jump right into it. On the top left, you can see the iShares Silver Trust, which basically enables retail to buy physical silver without having a storage, versus CopX, which is a global X copper miners ETF, which provides exposure to copper mining basically. On the top left, we have 10, which is the Invesco Solar ETF, and this ETF is tracking the solar energy industry with investments in solar power equipment, installation and financing. Then we have Grid, which is the First Trust Clean Edge Smart Grid ETF, which tracks companies that build smart meters, energy storage and the hardware needed to modernize the electric grid. Then on the bottom right, we have LIT, which is a global X lithium and battery tech ETF. And this ETF tracks the entire lithium life cycle, so mining, refining, and manufacturing the lithium-ion batteries. This ETF is taken to see how the EV industry is performing as they need these lithium-ion batteries. So let's start into this quarter chart. And to determine where we are right now and to take some information out of the charts, I just underlaid a very simple indicator, which is the relative strength index. And I also have drawn in the highs and at some charts also the lows of the RSI, and with that also mostly also the charts with vertical lines. And I have also drawn VWAPs, anchored VWAPs from the highs and the lows, as you can see here. So the thing in the top left is that we see a upper trend line that got tested twice and that we are approaching right now, although we are making a quick corrective movement before we are probably touching this. In addition to that, we can see that the RSI is making a significant high here in comparison to the other ones. It is not overbought yet, but it may be in the coming future. Or we see the same pattern as in the last touch of the upper trend line, which is we make our high in the RSI before we touch the line. This may be also coming true, and this is also pretty likely. So we need to shift the vertical line a bit back, because as we see it in the last one, is that we retrace a bit to seek for support by the VWAPs, and then with the new support, jump to the trend lines, and then make a rather sharp correction movement that we see here. But how these spreads even work, I forgot to tell you this. And this basically compares the two ETFs. And if it goes up, then the first symbol in the equation is outperforming the other. And if it goes down, then the second symbol in the equation is outperforming the first one. So this is basically how it works. It's all relative, and the values at hand don't really mean anything if you are not comparing the absolute values of these two ETFs. So what we see here in the charts, to summarize this, is that we want to see support here, make a touch of the trend line, and then pivot down again, right? So this is what we are expecting in the top left. Let's look at the top right. And here I took the same strategy. So I've drawn in the highs and the lows with vertical lines, and I've drawn anchored VWAPs from these highs and lows. And as you can see, in the last time we turned oversold, we made a relief bounce of 154%. And here we also did this, so we turned oversold, and then we made a relief rally. And right now it's a pretty similar picture. We turned oversold and are now also seen in the RSI turning upwards again. The question here is, for us, how far will this continue? Well, there are two crucial resistance levels we need to keep in mind. And the first one is this blue line here, as we seek support here already and broke it in the last time. So the question raised here is if this support is turning to resistance. And the second question is if we have enough fuel to reach the VWAPs up here. This would count for around 200%. And in comparison to the last relief rally, this would also be possible. So our key takeaway from this top right chart is that we need to keep in mind the resistance levels, but overall we have a positive expectation out of this. Then let's look at the spread of the solar ETF versus the lithium batteries ETF. And here we can see that the spread formed a triangle pattern and is also bouncing off of the lower trend line. In addition to that, we see a triangle in the RSI, and we are also bouncing off of that and cross the moving average here. But we will be approaching resistance levels shortly, and at the second resistance level there will also be the VWAPs I've drawn again from the highs and the lows. So the question here is if we are going to break the first resistance and make it to the VWAPs. And the question then raised is basically, are we going to break those VWAPs? I personally don't think so, as we also don't see any squeeze crosses right here, as we saw it in the lows in 2017 and also in 2012. But the rise to the VWAPs is probable. let's move on to also compare the grid ETF versus the lithium batteries ETF. And I took the same approach here. And here we are basically between two support and resistance levels. I've marked this support level as resistance level as we broke it, and it may turn into a resistance level. And I've marked this one green as we also broke this resistance level, and it may be turning to support now. In addition to that, the VWAPs are also positioned around this level. So we may be seeking for support here, rise again to the upper VWAPs and continue a downtrend. But this is only speculation right here. I think a support at the VWAPs is probable, but a rise again to the upper VWAPs is too much speculation as to really trade based on this, right? This is far away. So what can we take out of these 4 charts is that we expect to see outperformance of silver over the next couple of months, as all of these charts are monthly. And we are also expecting an outperformance of the solar assets against the grid and against the lithium batteries assets. Between those grid and lithium assets, the lithium assets over the next couple of months are favorable, but we expect to pivot to grid assets for a short time then, right? So let's move on to get a broader understanding of this solar ETF and see where it positions itself within the broader market environment and not only this thesis, right? So now I'm comparing the solar ETF versus GDX, which is a 1 gold miners ETF. Then we have the solar ETF versus XLE, which is the Energy Select Sector SPDR fund. Then we are comparing the solar ETF versus REMX, which is the FUNEC Rare Earth Strategic Metals ETF. And on the bottom right, we see the solar ETF versus XLK, which is the Technology Select Sector SPDR fund. Well, and on the top left, we can see that we just come out of a oversold RSI zone, and we are on our way to break the most recent VWAP. If we break this VWAP, then we may be also looking for the upper VWAPs, although they are a bit far away. To take this into perspective, we saw a outperformance of the solar ETF before when it came out of the oversold region in the RSI. And if we measure this, then we can see that until the oversold signal, we made a 500% outperformance. This is only relative, and we need to see how this gets reflected by the assets then, and then in the specific analysis of these assets. But this is the short-term outlook for the performance comparison between these two ETFs. So also here, the expectation is rather positive for the solar ETF, but let's move on to get a broader understanding. On the top right, we are comparing the solar ETF versus the Energy Select Fund. As we can see here, we are in a superior downtrend and we haven't broken major highs and haven't made higher highs or higher lows. In addition to that, we haven't made an oversold RSI, so this is expected to come next. All of the VWAPs are above, And so we face no real support other than the green line right here below us. A good sign for a turn of this spread would be if the RSI turns oversold or we reach this support level. But we need to keep in mind that even though we are reaching the support level, this doesn't mean we are turning, especially if we didn't turn oversold then. So we need to keep this in mind. So out of the top right chart, we take a rather negative outlook for the solar ETF, although this also can mean that the energy select sector is just performing better than the solar ETF, right? So this doesn't necessarily mean that the solar ETF is bad, but it's definitely likely to outperform the energy select fund. Moving to the bottom left, we see again the VanEck Rare Earth Strategic Metals ETF. And we also approached a low we made in the past now in the RSI as well as on the spread chart. So we are at a support level that came in and fueled a rally in the last time, but this doesn't necessarily mean, again, that we are rallying again, especially because we broke the support level here, kind of, although we made a V-shaped recovery. For me, this means that the support got tested again, but this time it didn't hold as well as in the past, right? So what I'm expecting here out of this chart is now that we are returning to the VWAPs around here and then pivot down again and break the support level. A positive sign for a turn up, at least temporarily, would be if the RSI turns oversold. This would be a good sign for the solar ETF to outperform the REMX ETF, right? Again, this doesn't mean that the solar ETF is going to perform bad, but it does mean that we are going to perform worse than the REMX ETF. And these two scenarios also make sense. As we see the tensions in Iran, it just makes sense for an energy select fund to increase in performance as the prices for these energy assets rise. This just makes sense. And also speaking of this rare earth and strategic metals ETF, this also makes sense as this is also the thesis we are following here, right? We are speculating based on these strategic metals, as silver and copper are also crucial for the electric industry, although they aren't this rare as, for example, I don't know, nickel, for example. I don't know if nickel is actually rare, but just to take this into perspective a bit, right? So let's move on to this solar versus technology chart down here. And here we can also see that we are coming out of a oversold zone, although we didn't really go deep into this zone, right? The last time we went deep into this was in 2012, and here we made a 161% rally. The last time we got into this negative zone was in 2018, and we made a 172% rally. But getting in this oversold zone doesn't mean necessarily that we are rallying that far, because in 2017 we also got to a oversold level, but we only rallied 21% to the top. So this doesn't mean anything. And in this chart, I also have a few concerns, because we touched the upper trend line in 2014, we touched the lower trend line in 2017, and we touched the upper trend line in 2021 again, but we haven't touched the lower trend line yet. So this might be the next level we are approaching. And in addition to that, we see right here that the RSI is picking up heavily and rising strongly, but the chart isn't reflecting this impulsiveness, right? As you can see it here. Here it's also steep, and the chart also reflects it's steep, but here it isn't. Yes, we broke the first few VWAPs, but there are also a few above, and turning overbought would be a negative signal for the solar ETF performance-wise against the technology sector. So in total, we have around 4 comparison charts for the solar ETF, and we have 3 kind of against it, right? So we will see how this performs now. But let's take a look now into the detailed view of the stocks of the ETF, right? So how did I pick these stocks? Well, I looked up the ETF. I pressed on the 3 points here. I've looked up the metrics, the profile, and here you can see the holdings of the whole ETF and the exposure of it. And in the other ETFs I've shown you, like the grid, the lit, and the Corpex ETF, I've analyzed the symbol with the most exposure. And in the solar ETF, as this seems to be the most promising one, I analyzed the first 2. So now we are going to take a look at this analysis. So let's take a look at this now. As you can see, we just finished our wave 3 in the cycle and are now building out our corrective movement of the cycle wave 4. I think this is the most probable scenario, as it would fill the alternation rule that is a guideline within the Elliott waves. That means that wave 2 and wave 4, the 2 corrective waves, should alternate from each other. So for example, if the wave 2 is sharp and deep, then the wave 4 should be flat and flat basically. Also, the complexity of these waves should alternate. So if wave 2 is simple, then wave 4 should be a bit more complex. And this is exactly what we saw here in this chart. So we see the wave 2 building out a sharp and barely deep corrective movement, and also simple, of course. And as we can see here right now, we are forming a corrective structure in form of a flat pattern. So right here in beginning of March, we completed our wave A or let's say just now, we completed our wave B, and right now we started a downtrend to complete the wave C down here. This should be a bit sharper downtrend, as the wave C is expected to be the most impulsive one of the corrective pattern, right? As the wave 4 should then be a bit more complex, there should be multiple patterns, and this is reflected by the WXY corrected structure right here. So when we corrected our flat pattern, we are most likely to rise again into that zone right here between $111 and $118, and then pivot again down to the zone of $90 to around $100. And this would be the last pattern we would be forming before we enter the last impulsive wave of this superior cycle. And that would be the wave 5. And here the target is around $144 to $175. This would make around 50% to the lower border of this target zone. And this is what I'm expecting the chart to develop, right? This zone right here can change over time depending on how deep the wave C gets and how high the wave X will get. So if it gets higher, then the zone will also be a bit higher. If it gets lower, then it will also be a bit lower, right? The same principle applies for the wave C down here, right? So the only retracement we should be trusting right now in is this right here, that the price should pivot between the $92 and the $107, right? So this is what I'm looking for. For you, this means no financial advice. And if I were to act on this, and I want to act on this, is that I'm buying my first stack of stocks in the target zone of the wave C. Then I'm waiting for the wave X to complete and for the wave W to complete. Maybe take some profits in the wave X, depending on how far it will develop. If it develops like I'm anticipating it right now, with the target zone right here, then I won't taking profits because, well, why should I take profits if my zone is just around the break-even zone, right? This just doesn't make sense. And then I'm buying my second stack of stocks right in the zone of TW, and then I'm going to enjoy the journey to the $144. So this is the outlook for the near term. So let's continue to the second stock of the solar ETF. And this is a whole different picture. Right now, we are most likely in a sharp corrective movement. And this also gets confirmed by the chart, kind of, right? So what I'm looking for here is that we completed our wave 1 in the mid of March, completed our wave 2 just a few days ago, and are now in wave 3 downwards, with the target zone expected to be at $52 to $61. From there, we will most likely retrace to $64 to $66, and then we are most likely going to pivot into another downtrend to the $44 to $52 zone. The Fibonacci zones, the second away from the current scenario. So, for example, this would be the second Fibonacci retracement drawn into the future are subject to change in the future, depending on how far the wave 3 will develop, and the wave 5 extension is again subject to change depending on how deep the wave 3 and how deep the wave 4 will develop, right? So the only one that we can really trust right now is the wave 3, and this is what we should be looking at. I personally wouldn't buy here right now. I personally wouldn't buy, as we are probably doing a major uptrend, and although we could take swing trades, this is highly risky, and as the market bears infinite opportunities to us and has a lot of assets to look at, we shouldn't be taking any risk that is unnecessary, right? The alternative scenario, with the probability of 20%, is that we are building out a flat corrective movement. Why do I think that this is unlikely? In a wave 2, a typical corrective movement is a zigzag pattern, which is a pattern of 5, 3, 5. So as you can see here, 5 waves, then we do 3 upwards. Like you can see here, I can also enable the wave lines. And then we again do a 5 wave downtrend, as you can see here. Right? This is the most likely one based on the principles of the Elliott waves. And the flat corrective movement is just highly unlikely. But as a investor, I want to be prepared for any scenario happening, right? So, or for these scenarios, I can overlook, of course, and I need to say this, there is uncertainty in every analysis, right? There's no analysis that a credible analyst can make with 100% certainty and with 100% probability. The only 100% probability has the future, right? So if the actual chart, if the actual price reaches my zone, then 100%, of course. Then I can say with 100% certainty that this is the wave 3 right here, right? But telling now 100% would be well, untrustworthy, something like this. The flat corrective movement is not typical for wave 2 and would imply that the wave 2, just like it is right now, would not reach any Fibonacci niveau or Fibonacci level as it's drawn in here. If we turn this into flats, wait, you can see we are not approaching any of this. And this makes this scenario highly unlikely. And so I've just drawn it into the chart to be prepared for another chart direction, right? So let's move on to the next stock, which is National Grid. Here we most likely completed our wave 4 right here and are now starting our wave 5 upwards again with the target zone around 1,464 and $1,613, right? As we saw, this wave 2 was rather flat, so should the wave 4 right here be a bit deeper, and we approach the deeper Fibonacci levels as expected. This is good. But we also see that the wave 2 right here is rather simple. So am I expecting in the alternative scenario with a 40% probability that we are going to make in wave X until around here or even a bit higher, and then go into a wave W to complete this more complex corrective movement, right? So this is what I'm looking for. The total gains from right now to the upper target zone would be to the lower border would be 18%, and if we trade it to the completion of the wave 3, this would even be 24%, so a bit, right? This scenario gets invalidated when we are breaking this red line here. Then it would be invalidated, and the primary scenario would be validated if we break this high of the wave 3 right here. Yeah, so this is what I'm looking for right here. Let's move on a bit. to the next stock, which is Rio Tinto. And here we can see that I'm 60% sure that we completed our wave 3 here, are now in our wave 4, and I'm now expecting for the price, for the stock to turn and pivot upwards to the target zone of the wave 5 right here. This would mean a total gain from here of 50%. But there's also the alternative scenario, which is that the original wave 3 would actually be in wave X, although this would be an untypical wave X because it went so high and overshot so far, and that we are now on our way to a wave W. The alternative scenario gets validated if we break this red line right here, and the primary scenario gets validated if we break this green line right here, right? And also I need to say this, just from looking at the chart, I think that breaking the low right here would be a bad sign, because we just have because we have not that much space left right here. That would be only around 3%, right? So let's move on to the next one, which is also the last stock for today, which is the Sumitomo Metal Mining Corporation, or Co. And here I suspect with a chance of 60% that we completed our wave 3, are now in our wave 4. And again here, I'm expecting a complex wave 4 because the wave 2 wasn't complex. And so am I expecting for the price to pivot in the zone of, and so am I expecting the price to pivot at 11,260 of 11,945 and to pivot again in the zone of 6,702 and 8,552. In the alternative scenario, we are breaking the high of the wave 1, which would invalidate this scenario, but I suspect this with a probability of less than 10%. And in the other alternative scenario, I suspect that this corrective movement would be just simple as that, and that we then would be turning upwards and even break the green line right here and make our wave 5 a bit too early. Like, let's say this, right? So a validation would be the green line, a invalidation would be the lower red line here. And as I told you earlier, this Fibonacci retracement is credible, but this will change with the deepness of the wave X. So this is my take on the current situation. I will do a follow-up video, again a follow-up about the current tensions in Iran, about the current risks. I'm going to use the new AI swarm intelligence for that a Chinese developer made. I think it's called Mirrorfish. I made a few tests with it, and I think it's pretty good. And so we will see each other around next week again. And I wish you a successful week and have a good day. Bye.